So there's a lot of talk in the global markets around what's happening in China, what's the health of their economy, but you look at some of the key signals around LNG demand, and that would include the spot price markers in both Asia and Europe, which continue to be really strong, in fact above oil parity. For me, that is a signal that our traditional buying customers, the winter buying customers, are nervous. Inventories are in pretty good shape, but I think the buyers are worried about a cold winter and the impact that might have, and that's keeping prices sustained. So we feel like, as a supplier, we're positioned well heading into the winter. We've got a reasonable number of spot cargoes available to help meet our customers' demand, but we do think that the market conditions for LNG are pretty good right now.
How would you assess the appetite for LNG amongst the high-growth customers out here in Asia-Pacific region? And China has been struggling economically and now has a stimulus program ahead of it. Does that change the game?
Not particularly. So as we think about our LNG contracting, we like to have a mix of long, medium, and short-term contracts. Over the course of the past year, we've done long-term LNG contracts with KOGAS in Korea, CPC in Taiwan, and JERA most recently in Japan. So these are 10-plus year contracts. For me, that's a sign that our key customers are very interested in securing their long-term energy needs. When you get to China, so China has been very active in the LNG buying market, signing up for a number of 20 or 20-plus year LNG offtake deals. So again, while short-term there's a bit of stimulus and maybe a few economic wobbles, over the long haul, I do expect we'll see a return to more growth.
But broadly speaking, when you look at trade flows, when you look at demand and the leading indicators for LNG, is there anything consistent with a slowdown or a recession, or is this consistent with soft landing?
Look, our call is probably closer to the soft landing. That said, you know, there's still big elections ahead. I think there's a question of free trade and how robust is global free trade. So we'll have to continue to watch some of those factors. But by and large, it looks like the world is managing to navigate towards this soft landing.
And is there anything in the trade flows and in inventory restocking perhaps that tells you that customers are distinctly concerned with the supply situation, supply risks, instability in the Middle East, and how does that affect the calculus, Meg?
So the market has been surprisingly quiet around the events in the Middle East, which has been a bit surprising. We've saw a few little price bobbles when hostilities were ramping up. But it's been pretty quiet, actually. And for me, maybe that's a sign that there's sufficient supply sources around the world to help mitigate any temporary supply disruption coming out of the Middle East. And that's probably true for both oil and LNG.